Hello traders, it's Victor from TRADEPRO Academy, and I hope everyone is doing well. Welcome to our YouTube channel and yet another video. In today's video, we're going to be talking about the futures market yet again, and I'm going to be talking about a massive topic in the trading world. When to cut losers and when to let winners run, and how specifically to let winners run. Now, cutting losers, very easy in my eyes, right? There's one simple approach that I like to tell a lot of people. Now, if you have a stop loss, you don't have to worry about cutting losers, right? They're going to be cut for you. And this is why I highly advise on using stop losses, because here's the thing. When you have a stop, when you enter a trade and you have a stop, you have accepted that risk. Your risk that's accepted is whatever the stop is. It's very simple. You let that stop get hit, and that is the accepted risk. You don't have to worry about cutting losers, right? They're already cut for you. We're talking about day trading or swing trading here. Now, the topic at hand, which is going to be difficult, is how to actually trail your winners so you can get these larger, bigger, better gains. Now, this is a conflicting aspect for a lot of traders because they do want to trail their winners. However, the issue is they don't want to potentially give up the gains that have been accumulated so far. So they're going to trail their stop losses very tight to price, and usually they'll get kicked out before you see a larger move. So I'm going to talk to you guys about how we can avoid this using the depth of market and order flow. So if you guys are super excited about this video and understanding how to let these winners run, especially if you're trading futures and using a DOM, drop a comment down below and let me know. Do you struggle with one of these, cutting losers or letting winners run? What do you think is your issue when it comes to this? Now, I'm going to show you something and let me know if that does help you. I want you guys to hit that like button, hit that subscribe button. Check us out at TradeProAcademy.com because we do have a free side to our membership where you can see a lot of our videos and resources. So I'll see you guys after this intro. Let's jump right onto a computer and I'll show you exactly what I mean. All right, so welcome to the computer side of this. I'm going to show you guys how we look to actually trail these positions, how to let winners run. Now, this is a trade that we were talking about in our room. Like, if you want to go check that out, just check out TradeProAcademy.com. You can find our rooms there where we identified some stuck shorts that were coming in and around these 88s, 90s. You can see they're actually shaping up here. So we were taking a long position, coming in volume profile ledges, blah, blah, blah. Anyways, so we're looking for a long position here based on this. And what I'm going to do is I'm going to get into, what is it, 6 contracts. So we can actually trail this properly, meaning that we're going to take 2 off at this area right here. So we're going to try to take 2 off in that case and then try to trail the others. Now, when we get into this trade, is a simulated replay, obviously, but when we get into this trade, what we could do, there's 2 different ways to actually trail. The main way that I'm going to be showing you guys is using the actual profile here and using order flow. Now, the other way is from a market structure or price action perspective. Now, if we're getting long here at this key support, right, based on market structure and price action, you're going to give this a lot of breathing room, right? Because you're going to be waiting for something like this, higher lows to print so you can put your stops below those areas. Now, if higher lows do not print, then it's going to be a little difficult to trail this properly. So when you're talking about market structure, you do want to see a higher low print, but this prior high has to be exceeded for this to actually be a prior low. So you might get a 5-point pullback, a pop, and then you put your stop here, which is pretty much where you had entered. So I'm going to show you a different way using actually the volume profile and using the depth of market. Now, the volume profile, what we have to understand is on a daily basis, split up into distributions. So what that's going to allow us to do is when price actually enters into new distributions, we can hide stops within the distributions that it has gone through. So let's look at these ledges, right? So for example, when price moves, there's 2 distributions here that are very easy to see, right? This one and this one. When price moves into this distribution, realistically, the ledge of this distribution is going to be a gatekeeper. So price shouldn't enter back in this distribution. Doesn't mean I put it 1 tick below the ledge, right? I put it somewhere here where we can be a little safer within the distribution block. So let's see how this thing plays out and how we can actually actively trail this. Now, obviously, reading the DOM is another aspect, but I'm mainly going to be focused on how we can trail based on these profiles. Now, I don't necessarily know where entries are going to be and whatnot, so I'm just going to try to get in all of these. There we go. So they're all filled at this point, right? All 6 of them. Realistically, you're starting to see, again, more accumulation of stuck shorts, meaning that market shorts are entering this and they can't push prices lower. So again, if you want to learn more about reading the DOM, we do have an amazing course out, but you can also check out our YouTube videos for this. So right now we are below the current distribution block here, this ledge. So we want price to move into here, right? Ideally, it's going to be somewhere, the target should be realistically somewhere here at the top of this distribution. And I don't want to trail unless I've taken profit out of the position. A lot of people do zero or heroes where they just allow their position to run and they decide when to close it. I'd rather be trimming and securing profits along the way than seeing how far this can go based on some discretionary movement. So right now, we're coming into the top of this distribution block ledge. You saw how it failed the last time around, right? It's not going to be an easy place to get out of. So the average fill, right? We don't want to, I usually look for like 5 to like 6 points on my first take profits. I don't necessarily want to mess with the risk to reward, right? If I have a 3-point stop, I do not want to be taking less than 4 points realistically. When the first take profits out, I want to be targeting this area where we've saw a lot of failures. So that means somewhere between 3900 and the 05s or so. So I do understand that's 5 points. So why don't we take a look at the DOM? Into that area, you can see the 0550 is the top of this distribution ledge. So that means that if price manages to clear into this current distribution block, realistically, we should be tagging into the 05 region. So there we go. We have just taken profit on the initial position. So we've entered into this distribution block. We don't want to be too excited because we haven't necessarily hit the top of the prior distribution block. So it should be fine to move these stops to about break even, right, on the remaining position. I do want to see if price can actually accept, right? If price can actually accept into the top of this distribution, right? If we have this distribution and this distribution, if we can come into the top of the distribution, realistically, we shouldn't be moving back into below that distribution, right? So, and look, right there, we got taken out on these. So what happens if we can get in again at this area? Whoops, what did happen here? So let's see if we can get in on this area again. Ideally, it doesn't fill only one. And that's the reality of trailing. Even if we have the perfect replay example, we're trailing based on what we have, right? We have the information in front of us. So like I said, if we're looking at this, right, we should have been taking profit already on this. But since we only have one, let's see if we can trail it. And obviously, trailing with one is very, very, very difficult. It's one of the hardest things to do. I'd honestly just recommend taking profit if you have one. And I'm not going to trail until I see these guys hit the top of this distribution, that I can pull this price up into the 92 region, right? And this is the reality of trading, right? It's not going to be always picture perfect, and you're going to get those situations. Because they're still getting stuck shorts. You can see the large accumulation. You have 1,000 here by 200 buy side. Those shorts, right, that came in, they couldn't push prices lower. A lot of them came in here, and you just can't. You can't push that price. So now I can move this stop. I can put this stop somewhere here, because what we've done is we've entered a new distribution block. We're trying to enter yet another new distribution block. So when we get up into the 02s or so, when we actually pass this 99, then we can comfortably move the stop to about 95. Now, if we were trailing based on structure, we might say, okay, well, below this area, under this like 92, which is pretty much where we're sitting right now, we can put a trailer on this position, right? And that's the thing. We only have one. If we had multiples, right, it'd be a different story. But you're looking at this and thinking, well, my stop is at 92 and the thing's trading at 99 right now. I'm giving up 7 points of potential profit, right? If that's not something that you're interested in realistically, then you don't have to do that. You can either just take the position out or trail a little tighter, right? So right now, our stop's at 96, price is up about 10 handles above that. We're moving into the top of this distribution. We can start hiding behind these ledges, right? Here it goes. Where are we going to hide, right? We're at the top of this distribution. We can find some ledges in these areas. If we manage to push above this area, what we're doing is actually coming into highs of the session. So if we move above 09, where there's a huge ledge, this thing should rocket. And I could easily put my stop in and around 06, and I should be fairly comfortable with that in terms of allowing this thing enough breathing room to actually move. Because we went up to about 08, the stop's at 01, so we're only giving up about 7 handles on this for another potential 10 to the upside, right? So we're just hiding behind some of these ledges, right? If you want to be really conservative, you could be under 99. But I don't want to move this stop unless we break through the 09 massive ledge right here that allows us to exceed into this low volume tail. So it's starting. We can be a little more confident in this move and say, hey, okay, I can put my stop at 03s. Very strong push here, right? We can say, I don't necessarily think it's going to be going below that 06 anytime soon. And if it does, that's totally fine. Because we're back below this ledge. Now, if you're trailing based on market structure, it's a little difficult because there's no real pullbacks on this, no higher lows to understand where you're hiding your stop. So you might be asking, well, we're at highs. What do we do here, right? There's no real distribution where you have this little ledge, this little cluster. So if price does manage somehow above this 15, you have this little cluster to hide behind, right? Otherwise, you can think and look at this and say, well, okay, they're kind of rotating this. I don't necessarily need to trail it anymore. I could just take this out, right? Because if we're trailing based on volume, you can see the volume profile here as well. You can see this larger volume profile. So if you exceed this, right, it's going to be a pretty easy path and see if prices can actually enter this distribution block, so on and so forth. And you're trailing based on those distributions. So a fairly simple overall strategy to learn when you're trailing. And you saw the first time that we tried this, we looked to trail. We didn't even trail tight. We were at break even and we came back, and we could easily enter the position again if we do like it, right? To catch that next move. And you notice that we didn't get stopped out. We didn't take a loss. We actually took some profit and we got break even on some of the on the rest of the position when we were looking for that original move. So remember, when you're trailing, always look to take profits along the way rather than zero or hero, which would require multiple contracts to be traded. So very difficult to trade with one contract. If you have two, you can take one off and trail the other, right? Especially if you're a newer trader, I would say focus on just taking profit at the beginning and then learning to trail based on something like this. This is a very good strategy. And if you have multiple lots, like 3+, it is a little easier to trail based on the volume profile rather than structure. So I really hope you guys enjoyed this futures trailing video to try to maximize your profits in the futures market without suffocating a trade. If you enjoyed this video, I want you guys to drop a comment down below. Did this open your eyes to a new style of trying to let winners run, right? Let me know what you guys think, and hit that like button, hit that subscribe button. Check us out at TradeProAcademy.com because we have a lot of free resources on the free member side that can help you understand futures better, especially order flow and the depth of market plus volume profile. So I'll see you guys there, and I'll see you guys in the next video. Thank you, and bye-bye.